it started with an act out of frustration and desperation. It was like we're going to take a strategic move because the alternative is a slow death or a quick death. And once you get to the point where your back is against the wall, you're going to do something. So at that point, we were a bit frustrated and we took our first Bitcoin position. Then Bitcoin began to rally. And when Bitcoin rallied back toward the all-time high,
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto. The global financial landscape is experiencing heightened disorder, with an estimated 3% of the $450 trillion in global capital, translating to $13 to $15 trillion each year, diminished due to inflation, inefficiency, and decay. Conventional assets, impacted by poor management, declining value, and persistent market dynamics, face challenges in maintaining wealth over the long term. In light of the prevailing systemic challenges, Bitcoin is positioning itself as a noteworthy alternative. Michael Saylor, a notable proponent of Bitcoin, argues that the distinct characteristics of Bitcoin make it a viable remedy for ongoing economic decline. In contrast to conventional assets, Bitcoin's limited supply, decentralized framework, and resilient architecture present a robust value proposition. Despite the current price volatility, including the ongoing crash, Bitcoin demonstrates resilience, indicating its capacity to function as a long-term store of wealth. The presence of institutional interest reinforces this perspective. Progressive organizations are progressively integrating Bitcoin as a safeguard against the shortcomings of the conventional financial framework. This transition highlights Bitcoin's ability to withstand the deterioration that affects traditional assets, offering investors a mechanism to protect their wealth in the face of global economic uncertainty. Insights from the analyst perspective. The structure of Bitcoin provides a safeguard against the centralized mismanagement that frequently affects conventional financial systems. This renders it especially attractive during periods of economic instability. Bitcoin's limited supply of 21 million coins creates a stark contrast with the inflationary tendencies of fiat currencies, positioning it as a compelling option for maintaining purchasing power. In light of recent price corrections, the increasing institutional adoption of Bitcoin underscores its development as a credible asset class. Companies reinforcing their positions during economic downturns highlight the intrinsic value that extends beyond mere speculative profits. Bitcoin's capacity to preserve value over time, unaffected by external economic deterioration, establishes it as a strategic asset for reducing systemic financial vulnerabilities. Despite the price volatility associated with Bitcoin, which may discourage short-term investors, its underlying principles and growing adoption indicate that it is strategically positioned to tackle the inherent inefficiencies present in the global financial system. As conventional systems struggle with increasing instability, Bitcoin's decentralized, unchangeable, and limited structure presents a transformative method for safeguarding assets during a time of ongoing economic uncertainty. And lots of things Michael Saylor discusses, so please watch the video. To end and share this video, and subscribe our channel Everyday Finance. Thanks.
I think it's an important milestone because when you get to the six-figure level, I think it sends the message to people that Bitcoin is here to stay. I think there's been multiple stages of Bitcoin, right? There were the early years when it wasn't clear what it was or whether it would survive. Then there were the block size war years when there was a big fight over the identity of Bitcoin and what was Bitcoin and what wasn't Bitcoin. And then I think from 2020 to 2024, I would say those were the crazy years, but there was the big question was, is Bitcoin an institutional grade asset? Will it be embraced by governments, by corporations, by institutions, by traditional capital markets? And there was back and forth, and there was a lot of skepticism. And, some people said it's too good to be true. Some people said it's so good they'll ban it. Some people said, well, there'll be a little bit, but it won't be much. And then there's a big fight over, is it a currency or is it capital? And I think that since November 5th, right, we've seen kind of a surge from like 68, 67, all the way through 100. I think the answer that's been questioned, the question that's been answered is Bitcoin here to stay? Is it an institutional grade asset? Will it be embraced by the wealth and the power of the world? And I think busting through 100,000 is a numeric punctuation. Uh, uh, it's been exhilarating, uh, and it's full of highs and lows. I think in the middle of 2020, it started with an act out of frustration and desperation. It was like, we're going to take a strategic move because the alternative is a slow death or a quick death. And once you get to the point where your back is against the wall, you're going to do something. So at that point, we were a bit frustrated and we took our first Bitcoin position.
Bitcoin is currently facing significant challenges following a macroeconomic disruption that has altered its upward momentum. In a 2-day period, Bitcoin experienced a significant decline of $100 to $12,000, reaching a low of $96,000 on December 19th. The significant decline has prompted market participants to prepare for potentially more severe corrections, as bearish projections are increasingly being adopted. Recent data indicates that both retail and institutional investors experienced significant turbulence, resulting in total crypto liquidations exceeding $900 million within the 24-hour period leading up to December 20th. The recent sell-off has been exacerbated by significant net outflows from U.S. spot Bitcoin exchange-traded funds, ETFs, totaling $679 million, according to UK-based investment firm Farsight Investors. This indicates a notable withdrawal by institutional investors, intensifying the downward momentum on Bitcoin valuations. Experienced market analysts, such as crypto commentator Bquant, recognized for his sustained optimistic outlook, caution that Bitcoin has yet to reach its cycle low. Bquant forecasts a more significant correction, potentially reaching the mid-$80,000 range, as indicated by the analysis of Elliott wave theory. In the current market analysis, on-chain data sourced from WhaleMap highlights essential accumulation zones within the range of $60,000 to $67,000. This suggests that a notable level of buy-side interest may materialize should prices near these thresholds. In light of the prevailing market volatility, long-term investors could identify potential opportunities within the disarray. Accumulation data indicates significant investor engagement at present price points, underscoring the presence of clearly defined risk-reward dynamics. Experts highlight that, although the immediate forecast seems challenging, the broader economic landscape continues to present opportunities for those prepared to navigate fluctuations. The recent downturn in Bitcoin serves as a clear indicator of the persistent difficulties facing the cryptocurrency market. The current liquidity challenges, intensified by prolonged risk-averse attitudes and broader economic instability, have amplified the impact of the recent price decline. The recent sell-off has effectively eliminated speculative excesses. However, the path to recovery is likely to be extended, facing considerable price obstacles in the near term. Currently, Bitcoin is at a critical juncture. Despite the current short-term price trends indicating ongoing downward pressure, the long-term fundamentals, bolstered by institutional interest, on-chain metrics, and favorable macroeconomic conditions, point to a robust asset class ready for recovery as market conditions normalize. It is recommended that investors exercise caution while also seeking potential opportunities, especially as Bitcoin nears significant support levels. Let's get back to Michael Saylor interview.
Then Bitcoin began to rally, and when Bitcoin rallied back toward the all-time high at the time, which is heading toward 19,000, we moved into an opportunistic phase, and we opportunistically found we could raise money in the convertible bond market for less than 1% interest. And it's like, if someone wants to give you billions of dollars for free to pursue your business strategy, right? What CEO wouldn't take the money for free, right? And so, yeah, we did that. And then we moved into sort of what is it, the terrorized zone. I think Bitcoin soared up, then it crashed on the Chinese.
Yeah, the China ban.
First, the China ban. And then there was the environmental ESG FUD.
Right, Elon discovered that it used electricity all of a sudden.
Yeah, we fought our way through that. And then it surged back up again. And then we went into the crypto winter. And we fell from 66,000 to 16,000. And so that 80% drawdown, I think that was, the big test, because it shook out the tourists, and it also shook out everyone that didn't know how to manage a capital structure. So, the poorly capitalized, entities that had lots of credit risk and had unhealthy leverage got taken out. And there was a lot of forced liquidation and panic selling of Bitcoin that took us to the 66,000. And you just had to grit your teeth and get through that. And I would say, that was sort of the low point, right around the point where Silvergate Bank failed, or it was
like Q1 2023.
Yeah, from FTX to Silvergate Bank. And it was also sad. I mean, a lot of poorly run companies failed because they were poorly run. But then there were a lot of good companies. I thought, Signature, Silvergate were forced out of business to no fault of their own. They just, they were caught in choke point 2.0, and that was...
The recent downturn in risk assets, including Bitcoin, underscores the delicate interplay between macroeconomic policy shifts and market sentiment. Bitcoin's price decline, attributed partly to the Federal Reserve's announcement of a slower pace of interest rate cuts for 2025, highlights the vulnerability of overly bullish market positioning. This decision comes amid resurgent inflation markers, emphasizing the Fed's commitment to cautious monetary policy adjustments. Trading firm QCP Capital noted that the sharp sell-off was not solely due to the Fed's hawkish stance, but also to the market's prior exuberance. Following the election, risk assets had experienced a sustained rally, creating a precarious environment ripe for a pullback when faced with any adverse developments. At the time of analysis, Bitcoin was trading at approximately $97,000, flat compared to the daily open, according to TradingView data. This level reflects a pause in the cryptocurrency's previous bullish momentum, as traders digest the implications of a more measured approach to monetary easing in 2025. Bitcoin's vulnerability to macroeconomic trends suggests that policy announcements and inflation data will continue to exert significant influence on its price trajectory. The market's sensitivity to external shocks may prompt traders to adopt more balanced strategies, reducing exposure to overly bullish bets. While short-term sentiment has been shaken, Bitcoin's long-term narrative as a hedge against inflation and a store of value remains intact. Investors may view current price levels as an opportunity for strategic accumulation, particularly if macroeconomic conditions stabilize. The current environment reflects a recalibration of risk across asset classes, driven by the realization that monetary policy normalization may take longer than previously anticipated. This development, coupled with persistent inflation concerns, underscores the need for diversification and risk management in investment portfolios. Bitcoin's ability to weather this period of heightened volatility will be closely watched by institutional and retail investors alike, as it seeks to reassert its role as a resilient asset in uncertain times. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.